So, there's a huge crisis brewing in the Middle East, and it's threatening to cause a serious disruption to the world's energy supply. Now, when you hear that, your mind probably jumps straight to oil, right? But what if I told you the real story, the more dangerous story, is about something else entirely? Let's break down what's really at stake here.
And look, this is the warning analysts are shouting from the rooftops. The escalating crisis with Iran is threatening the worst disruption in gas markets since the war in Ukraine kicked off. So yeah, while everyone's eyes are glued to crude oil, the bigger shock might be coming from natural gas. And it's a shock the world might just not be ready for.
So what's actually going on? Well, to put it simply, geopolitical tensions are just hitting a boiling point. We've got a conflict involving Iran, the US, and other major powers in the region, with retaliatory strikes and some really heated rhetoric creating a super volatile situation. And when everything's get unstable in the Middle East, the entire global economy kind of holds its breath, all because of one very specific, very critical location.
Yeah, this is it. The entire crisis. Everything we're talking about, it all hinges on this one single, narrow strip of water. It is one of the most strategically important places on the entire planet, a true choke point for global energy.
Okay, so this is the famous Strait of Hormuz. It is the only way for ships to get out of the Persian Gulf. Now, Iran has threatened to block this passage time and time again, but with tensions this high, that threat is being taken more seriously than ever. The US says it won't let a blockade happen, but honestly, the risk alone is enough to send markets into a panic. And here's why that's such a massive deal. About 20%, think about that, 1/5 of the entire world's daily crude oil supply has to squeeze through this one strait. If this route gets blocked or even just disrupted, the immediate impact on oil would be huge, and we're already seeing the first signs of that.
All right, so let's start with the obvious ripple effect, the thing that always grabs the headlines. What's happening to the price of oil?
What's fascinating here is that we're already seeing the impact. Just the threat of a disruption has sent Brent crude prices jumping by about 5%. It's not because supply has actually been cut, not yet anyway. It's because the traders, the people betting on this stuff, are pricing in the geopolitical risk. They're betting that logistics are going to get tougher and supply might get a whole lot tighter.
And believe me, this could just be the opening act. Big banks like Barclays are already updating their forecasts, and they're suggesting that if this crisis keeps going, oil could easily shoot past $90 a barrel. Historically, when you see this kind of geopolitical tension, it can add anywhere from a 25 to, get this, a 300% premium to the price. So the key takeaway is, the longer this drags on, the higher that number could climb.
Okay, so what does this actually mean for a huge energy importer like India? Well, the good news, if you can call it that, is they probably won't run out of oil. India's been smart. They've diversified their suppliers, buying from places like Russia, the US, and West Africa. But, and this is a big but, there's a catch. Getting oil from the Gulf? That takes maybe a week. From these other places, you're talking over a month. So yeah, the supply might be secure, but the cost and the time to get it are about to skyrocket.
Right. But this is the point where this story takes a huge turn. Because if you think this is all about oil, you're missing the much bigger, much more concentrated threat hiding in plain sight.
The real weak spot, the thing that could trigger that worst disruption since 2022, it's not about oil. It's all about liquefied natural gas, or LNG. This is the hidden danger in the Strait of Hormuz crisis.
All right, let's go back to India for a second, because it makes this super clear. While they import 90% of their oil, they only import about half their natural gas. On the surface, that sounds better, right? Wrong. The problem isn't how much they import, it's where they get it from. It's all about concentration. While their oil supply comes from all over, their gas supply is dangerously dependent on one single region.
And that one region? Well, it's pretty much dominated by Qatar. Qatar is one of the biggest LNG exporters on the planet. And guess how almost all of its gas gets to the rest of the world? You guessed it, through the Strait of Hormuz. So a blockade doesn't just threaten 20% of the world's oil. No, it puts 20 to 30% of the entire global gas supply at risk. We're already seeing tankers linked to Qatar just stopping in their tracks as buyers scramble for other options.
Now, we've seen energy crises before that hit Europe or the US really hard. This one? This is shaping up to be a distinctly Asian crisis. The countries most at risk are all in the East.
And this chart just lays it out perfectly. The list of top buyers reads like a who's who of Asia's economic powerhouses. You've got China, India, South Korea, Taiwan, and Pakistan. They are all incredibly reliant on this single source of energy that has to pass through that single choke point.
So what does that actually mean?
What's at risk here? Well, with summer coming up, we're talking about the electricity you need for air conditioning. We're talking about the industrial production that keeps these economies humming. And of course, it means higher energy bills for regular people, which could make inflation across the whole region even worse. The ripple effects here are just enormous. Okay, to really get this, let's put it side by side with the 2022 gas crisis. Remember that? That was all about Russia cutting off pipeline gas to Europe right as winter was hitting. This is a whole different ballgame. This time it's focused on Asia. It's not a deliberate supply cut, but a potential blockade. And it's all happening as Asia heads into its peak summer demand season.
And this might be the most alarming part of all. The world is just less prepared for a shock today than it was in 2022. Back then, there was a little bit of slack, some wiggle room in the global LNG market. Today, that market is stretched incredibly thin. Asian demand is already high, and Europe is still gulping down LNG imports. There just isn't a lot of spare capacity to go around, which makes any disruption so much more damaging.
So here's the bottom line. While all the headlines are focused on oil, the silent, creeping threat is to the natural gas that powers Asia's growth. It's a stark reminder that our incredibly complex global energy system can basically be held hostage by one narrow strip of water.